We'll just keep buying, right? The price is going to go up. It's going to get exponentially harder, and the price is going to go up exponentially higher, and we'll just keep buying. And at some point, if we get to 5% of the supply, Bitcoin's probably going to be $1 million a coin. And if we get to 7.5% of the supply, Bitcoin will be 10 million a coin. And then we'll be, if I'm lucky enough to grind to 10% of the supply, Bitcoin's going to be 50 million a coin, and someone will be whining that whatever, we have too much Bitcoin, but other people will have $400 trillion of wealth, so, our view is it's a ratchet, and we're just going to keep cranking on the ratchet, and there's massive leverage here. And I think everybody's winning if we do that.
The greatest wealth transfer in history is unfolding right before our eyes, and most people are completely missing it. If you think you've seen big financial shifts before, trust me, you haven't seen anything yet. As institutional giants finally awaken to Bitcoin's brutal scarcity, something monumental is happening in the markets right now. In 2025, as Bitcoin's price rises to record highs, the global competition to acquire the remaining coins is intensifying. Only 21 million Bitcoin will ever exist, and over 19.5 million have already been mined. The math is simple, but unforgiving. Every new buyer, from hedge funds to nation-states, tightens the noose on supply, sending prices soaring. The result? A relentless supply shock that could send Bitcoin to unimaginable heights. And nobody understands this better than Michael Saylor, the visionary behind MicroStrategy. Saylor isn't just a Bitcoin advocate. He's a relentless evangelist, guiding his company and investors to secure as much Bitcoin as possible. His strategy is ruthlessly simple. We'll just keep buying. The price will rise exponentially as Bitcoin gets harder to acquire. Just look at what's happening right now. Institutional investors are doubling down. BlackRock, Grayscale, and others are making moves that are pushing Bitcoin towards new all-time highs. Nation-states like El Salvador and Venezuela have already begun stockpiling Bitcoin as a hedge against fiat currency inflation. But as Saylor says, this isn't speculation. It's game theory in action, and the clock is ticking for everyone else. Here's where it gets mind-blowing. If MicroStrategy and others reach 5% of Bitcoin's total supply, we could see $1 million per coin. At 7.5%, $10 million per coin. But if we hit 10% of the supply, brace yourself for $50 million per Bitcoin. Every single purchase accelerates the supply squeeze. As demand skyrockets, only a limited number of coins will be available, and with each new buyer, prices will rise exponentially. For those who get in early, the rewards could be life-changing, staggering wealth for those who have been patient. So what's next? Corporations, banks, and nation-states are already racing to secure Bitcoin. In fact, we're seeing an unstoppable tidal wave of demand, and soon, today's prices might be seen as nothing more than a historical discount. The question isn't if Bitcoin will reach new heights, it's how high it will go once the last coins are mined. If you're still sitting on the sidelines, there's one thing at risk: being priced out forever. Now is the time to get in. We'll dive even deeper with fresh clips from Michael Saylor's exclusive interview. You don't want to miss this. Make sure to like, subscribe, and turn on notifications so you stay ahead of the curve during the biggest financial revolution in history. Thanks for tuning in. Now, let's get into the video.
I think that the best way to generate yield and generate a return is you buy the Bitcoin, you hold the Bitcoin in cold storage, and then you sell equity at a premium. That's the risk. When you're selling equity at 3 times NAV, you're literally selling dollar bills for $3 all day long. You have a money printer, okay? It's a risk-free money printer. So why would you do anything else if you could literally sell dollar bills for $3 all day long? And so the creation of high volatility, high optionality, public equity, and then bonds, convertible bonds, fixed bond, corporate bonds, or preferred stocks. All of those are by far the best, lowest risk way to generate yield off of the underlying Bitcoin. They solve the compliance issues. right? Because you're selling a compliant security on a compliant exchange. So you don't run into this issue where you did something really cool that is illegal in the state of New York, right? Or it's illegal somewhere. So they solve the compliance issues, and then they also solve the scale issues. If you have a good bond, someone will buy. I've had meetings where someone gave me a $500 million order after the meeting.
Yeah.
Like, can you sell $50 million of something in 20 minutes? I've sold $250 million of something in 20 minutes. So if you want to scale the business, if you want it to be compliant, if you want to generate substantial material yields, then I think you want to do it by issuing securities. So basically, securitizing Bitcoin in some kind of wrapper. It could be as simple as, okay, here's an ETF. But it could be, here's a 2x ETF. It could be, here's a Bitcoin-backed bond ETF. It could be, here's the bond. It could be something else. It could be, here's the option. Those are all the most compelling ways. I think the reason that certain people in the crypto industry don't embrace it is they don't have the technical financial capability to create these compliant instruments in these markets. So they go for the crypto token approaches, or quote unquote crypto native. But the bottom line is the crypto native approaches are only 1% of the opportunity, and they're 100 times as hard. And so the real money here is going to be made by more conventional financial firms that are going to issue $100 billion worth of Bitcoin-backed bonds, and then $1 trillion of Bitcoin-backed bonds. And then when people go, oh, well, $1 trillion, I guess, is saturated, then they're going to issue 10 trillion of Bitcoin-backed bonds. And people watching are going to complain that it just seems too simple, right? It's like, and what I see a lot, Jeff, in this market is I run into crypto people that have been in the business for a decade, and they have very complicated ideas that don't work.
Yes.
And I offer them a simple idea. I'm like, here's an idea. You're a public company, sell your equity, buy the Bitcoin. They're like, no, that'll never work. Okay, well, I guess it might work. Well, what if the Bitcoin goes down? Well, blah, blah, blah. Okay, I guess it worked. And you know what the latest pushback is, Jeff?
Let's hear it.
The latest pushback is, well, it worked for you, and it worked so well that you're the winner and there's no room for another company to do it in the market. So we literally went from, I don't think it'll work at all, to it might, to it did. Oh, it worked too well. That's my excuse for why I'm not going to do it.
Yeah.
And people just come up with these giga-brain excuses for why they don't want to do the simplest thing in the world. And the reason it works, by the way, is everybody wants to be able to buy the equity and borrow against the equity from their existing wirehouse. So like MSTR, you can borrow against it from a big bank. They want to be able to sell the volatility to generate yield on us. You can do that by selling the covered calls, right? They want to be able to, they want to solve the custody issue. I want to call my Merrill Lynch broker and buy $10 million worth of it in like 15 seconds. So if I can, it's convenient, compliant, it's conservative, it's simple, we're just solving these very simple ideas. It's like, well, how about this one? I just like to buy the upside with no downside. Like our convertible bonds are outperforming Bitcoin right now. So why wouldn't you buy something which outperforms Bitcoin, but you have a credit guarantee and you're senior in the capital structure? Yeah. So the simple ideas are working, simple compliant ideas. The hyper complicated ideas, they're 100 times as hard. They're 1% as valuable. They're not working. And my advice to anybody is don't try to do those things. Focus on the simple ideas. The biggest no-brainer for every single company in the world is just flip their treasury to a Bitcoin standard. I mean, immediately they get the benefit of becoming capital attractive or positively polarized to capital, and they start making money off of their capital. But the secondary benefit is it really improves their brand, improves their marketing effectiveness. And the tertiary benefit is it'll get them into these indexes, right? It gets them into the crypto indexes. So,
Keep their cost of financing, and it'll be a virtuous cycle.
and the cliche thing would be to say it's an IQ test. But again, back to Peter Thiel, it's really just a courage test.
I love that.
It's do you have the courage to actually take a risk to 10x your company stock?
Yeah.
And you kind of just have to look at the people running the company and ask, does that CEO have the courage to take a risk? And then, and to your point, the CEO is only as good as the board. So like when Steve Jobs, when he took over Apple Computer again, he required that the existing board resign and he appointed all of his own board members. So if you have a leader running a company and if they have a supportive board, then they have this opportunity, which is just to flip the polarity on their company and make their shareholders a lot of money. And then the question is, do you want the money more than you want to avoid being embarrassed? Right.
Great.
And the world's full of people. It's like, do you want to win or do you just want to not lose? And a lot of the people in the world just want to not lose. Right. A lot of very successful, famous, rich people that they just don't want to lose. And because they don't want to lose, they give up the chance to win.
Imagine holding Bitcoin like a golden ticket, but instead of gambling with risky apps, you lock it securely in cold storage. That's the genius of Michael Saylor. For years, attempts to rehypothecate Bitcoin or create complex Layer 2 apps have failed. Saylor's approach? Keep it simple, scale smart, and stay compliant. Instead of risky schemes, Saylor advises buying Bitcoin, holding it safely, and selling equity at a premium. If a company's equity trades 3 times its value, it's like printing money legally. Why take unnecessary risks when you can sell $1 bills for $3? Saylor believes the future lies in firms that wrap Bitcoin in traditional securities, ETFs, bonds, and preferred stocks, because they're scalable, compliant, and trusted by big institutions. He dismisses crypto-native ideas as far too complicated and less profitable. But the real shift, according to Saylor, is how consumers will soon choose brands based on their Bitcoin alignment, much like how ESG reshaped purchasing decisions. Companies that embrace Bitcoin in their treasury not only strengthen their finances, they enhance their brand, lower financing costs, and attract capital. But Saylor warns, it's a courage test, not an IQ test. The key to success is having the courage to take the leap and win big. Stay tuned for more insights from Michael Saylor.
Hey, can you quickly touch on how you plan to make some of the assets productive?
Like we generated $12 billion of BTC gain last year. That's like earnings to the common stock investors. We've set a target of $10 billion or more of BTC dollar gain this year. That's like earnings. It is productive, right? And how is it? It's kind of like the frustrating thing is, say I owned 100 acres of Manhattan and I owned it and you put buildings on it. Right? And then you said, well, when are you going to make the 100 acres productive? Well, they're holding the buildings up. I'm getting paid rent. Like I'm holding the buildings up. It is productive. If the Bitcoin serves as collateral to the convertible bonds, to the preferred stock, and to the equity and to the options market, it is productive. Right? That's why we're succeeding, because we're able to see it in a different way than other people. You don't need to rehypothecate it. You don't need to, it's like you don't need to juggle the granite blocks. You could just put the building on the granite block and it would be productive. So we're using it as collateral. And you're like, well, how valuable that? Well, if it's worth 10 billion last year or more, then at the point it's worth 100 billion a year, aren't we making more money than everybody else in the entire financial world just by using it as collateral? Why do you need a second idea? I mean, it's perfectly fine now. The people that embrace Bitcoin are either the young that have everything to gain, nothing to lose, or the hopeless. And that happens at the individual level, the family level, the corporate level, and the same would be true of the country. The hopeless, or those with nothing to lose, maybe. Right now, people will talk about it, but I don't know there's much more to be said than that.
And that's a wrap for today's deep dive. Michael Saylor is boldly predicting Bitcoin could hit $50 million per coin. Sounds crazy, but with less than 2 million Bitcoins left and corporations circling, a 10% corporate mop-up could spark a historic supply shock. Do you think it's possible? Are we standing on the edge of something massive? Drop your thoughts in the comments. I'm reading every one. If you found value, smash that like button, share this with your family and friends, and subscribe for more Bitcoin and crypto updates. Thanks for watching, and I'll catch you in the next one.